Hello, everyone. My name's Jeremy Cronemeyer, Operations Manager for Wickham Financial Group, and I have Graham Wickham here, President and CEO of Wickham Financial and Insurance Services. And Graham's going to give us some insight on what happened in the markets last week. Graham?
Yeah, thank you, Jeremy, and thank you all for jumping on the call. Yeah, we saw, a bit of rising rates. We saw some China economic news, and I think that kept U.S. equities relatively in check for last week. So we saw the S&P up about 1%, really reaching an all-time high. Nasdaq was up about 2%. The Russell was down a little bit, probably because of those rising rates. We did see 6 of the 11 S&P sectors basically losing ground, with the ones that are most sensitive to interest rates, meaning rising rates like utilities, they were down about 4%. We did see energy drop about 3%, but at the same time, we saw crude oil rise about 1%, with some Middle East tensions that are going on, geopolitical events, and some U.S. output disruptions, because really that extreme cold that moved through the East. We did see the 10-year Treasury yield jump about 20 basis points. So I think that was putting pressure on those interest rate sensitive areas, utilities, the Russell, so on and so forth. That moved up to about 4.15%. From an economic standpoint, we did see the U.S. economy remain pretty much on relatively solid ground and expected to be that way going into 2024. A bit of an uncertain stance that the Fed might have in terms of lowering rates. So I think maybe the market's anticipating that the Fed's going to lower rates maybe more than it actually does. Maybe we get into a little more details on that in a minute. But we did see the U.S. consumer confidence sort of the highest level that we've seen in 3 years, followed by some strong labor market numbers. The one-year inflation expectation, that dipped a good bit. We're seeing or expecting that to be about 2.9%. The economic soft landing scenario, the manufacturing remained pretty weak. We did see U.S. production. That was pretty sluggish, so that's keeping the expectations for that soft landing or that inflation coming down and continue to come down. But we did see U.S. home builder sentiment improve slightly, but the housing starts fell the sharpest in December. Now, I think it hasn't fallen, or existing home sales, better yet, capped their worst year since 1995. Why? We got high mortgage rates still out there, at least to what we've been used to, and that's in low inventory. So that's bringing back affordability, and I think the appetite for existing homes. If we're going to go overseas, let's look at China. They posted growth of about 5.2%. Now, that came in roughly around the target, but maybe misforecast a little bit. So we're getting some real good volatility over there. I think concerns that maybe China is not growing quick enough to really boost that economy. What do they need to do to get that economy up there? They do have extremely high unemployment rate for the youth over there. I think they're reporting 20 plus, but I've heard numbers up to 50. I don't know exactly what might be 100% true. If we go over to the UK, we're looking at consumer prices accelerated for the first time in 10 months. They shot up to about 4%. So again, we want those CPI numbers to come down. We did see wage growth slowing a bit, so that's good. So that's not putting pressure on those higher rates. If we go over to Japan, their core CPI did rise to 3.1%. That's the highest they've seen in 41 years. So maybe they needed a little bit higher inflation over there to spur on some growth, but we just don't want it out of control. If we think about the week ahead, what are some expectations there? Listen, we're really right in the middle of earnings right now. But we got some central bank discussions that are going to be going on. We got some global PMI surveys that will be coming out, some inflation readings, some U.S. fourth quarter GDP numbers. We'll all be a part of the busy week that's in front of us right now. Gross domestic product is expected to come in at about 2%. Now, keep in mind the third quarter, that was about 4.9. Now, I think that was a bit of a blow off top in terms of GDP. So I think it's coming in line with expectations of slowing GDP, but not to a point of recession, but slowing just the same to bring inflation down. And like I said, we got some earnings here. We got Netflix and Tesla and Intel, American Express, Procter & Gamble, Raytheon, GE, so on and so forth. Some pretty big bellwethers to set the tone this week and this coming weeks in earnings.
Oh,
Jeremy?
thanks, Graham. I had a question for you. Do you think the investment markets think the Fed might cut rates too much? And if so, how will that affect the markets going forward?
Yeah, I'm glad you asked that. I do. I think the market might, is what I've stated before, I think the market might be just a little bit over its skis. Doesn't mean there's got to be a big correction or anything like that, but maybe a pause that refreshes, because maybe the Fed doesn't lower 6 times. And that's kind of what the markets have been pricing in. Maybe it is 3 more than mandate, or 2. And that could be a disappointment. And maybe it doesn't start in March, which many think. Maybe it's more June or into the 3rd quarter. So I think with all that, we want to think about that maybe the market's a little ahead of itself. How could it react if it doesn't quite get what it wants? Maybe a little temper tantrum. It is an election year, so that always brings in some question marks. But yeah, I think the markets could pause and have a refreshing period. I think that's a nice way to put it, if they don't get what they want in terms of more rate hikes, or excuse me, rate drops.
Gotcha. Thank you for the insight. And thanks again for everybody on the call here today. Don't forget, we have our retirement planning today classes going on, right? We actually start tonight, but we do have some spots available for this Saturday, coming up on the 30th. We do have some spots available, so go check out our website at wickhamservices.com for the more details, and you can register there, or you can go to Marietta Community School and look for our classes there. Just type in retirement planning today in the search bar and you'll find them there. And once again, thank you so much for joining us, and we look forward to seeing you next week.
Take care.